Let's take a check of the economy. The best proxy would be the banking stocks. And Mr. S.S. Mundra, Chairman and Managing Director of Bank of Baroda, is with us. Mr. Mundra, good morning and thank you very much for finding the time to speak with us. First, let's get one thing.
Good morning.
One thing out of the way, sir, in terms of the issuance of equity shares to the Government of India in exchange of the capital they're going to give you. Give us an idea of what will be the equity, the number of shares that you will offer to the government. What will be your new capital adequacy, Tier 1 and overall capital adequacy?
Yeah, Lata, if you look at it, our capital adequacy at the end of half year was 12.70% overall, and the CET is above 9% already. Now presently we plan to issue the shares worth the total infusion from the government side is 550 crore. That is what is expected. Of course the cut-off point is still some distance from now. The date, the relevant date which we have already notified to the exchanges, and then accordingly the price will work out backward. So what will be the exact number of share and what will be the premium on that would obviously be determined as when we apply the formula on that cut-off date, and obviously you have to take either the past 6 weeks or the 15 days as per the requirement. After this, we have a headroom available for Tier 2 as well as Tier 1 bonds. We have already raised 1,000 crore Tier 2 bond a few days back. So we may be raising some more Tier 2 bond, and yeah, of course would also be looking for Tier 1 bond depending on how the instrument evolves and how the investor appetite comes. By putting all this together, we expect to maintain our capital adequacy ratio above 12% as it comes to the March 14.
And Tier 1 approximately at?
Plus 9%.
Okay.
Okay. Mr. Mundra, good morning.
CET plus 9%.
Yes, got it.
Yeah. Good morning.
Good morning. Actually, we did not get a chance to speak to you post your earnings, so I'm going to use this opportunity to, touch base on some key issues that the bank has had. The first on asset quality. Sure. In your recent interaction that you had with many analysts, you did mention that you are seeing incremental stressed asset formations in the form of, slippages, higher restructuring, etc. In the third and in the fourth quarter, can you just give us a sense of how the asset quality may pan out, and what could be the extent to which you may see both slippages as well as restructured assets?
Sonia, I don't know that where from this kind of inference you draw that I had mentioned that I am seeing the formation of stress. As a matter of fact, very consistently for last 3-4 quarters, we had very clearly indicated what is the path which we are looking at. Accordingly, right from the Q3 of previous year, we had mentioned that we see 2-3 quarters of stress. As a matter of fact, after announcing the Q2 result, I had mentioned that in that cycle probably Q2 was the last quarter. And as a matter of fact, in Q2 itself, there we have seen some sign of improvement. Slippages were slightly lower than the previous quarter. As I see now, Q3 and Q4, as far as the slippages are concerned, I see now more the stable kind of quarter, leaning slightly towards the improvement. I did mention that restructuring, given the macro environment and other facts, restructuring is a fact of life, which we may have to live with for some more quarters. So this is where the position is. We still expect that as we reach near the end of the year, by March 14, we should be able to restrain our gross NPA within 3%, as we had indicated all along.
Okay. Mr. Mundra, the Reserve Bank has come with 2 recommendatory papers. Actually, these are still at the stage of drafts. The counter-cyclical capital buffers, which could go as high as 2.5% when the loan growth is very high, and of course for systemically important banks, and I would assume Bank of Baroda would fall within that category. Yet another probably extra capital dosage. Do you think that as these kick in, and they will probably kick in only in a year or two, you're going to see more constraints to your growth?
Lata, in principle, as both the concepts are right concepts, not that, and I think globally and even within Basel III framework, that is how the roadmap is. But when it comes to counter-cyclical buffer, at the point of time where we are standing today in the economy, probably is the time to consume the counter-cyclical buffer which would have been created sometime in the past. So obviously the build-up of counter-cyclical buffer would come only sometime in the future from now, when we are talking about the high credit growth and the the stronger GDP kind of scenario. As far as for the systematically important bank, the overall framework which has already been laid out, and I have expressed it a couple of times, is already more stringent than what the Basel III framework provides. We, in terms of time as well as in terms of percentage, we are already ahead of schedule. So I think the whole capital structure is strong enough, but to gradually, for the systematically important banks, there may be a gradual roadmap.
Okay.
But having said that, let me tell you that the SIBs, as they are looked into the global context and their correlation with the GDP of respective nations, and the situation in India, where bank may be big banks within the context of, relatively within the country. But when you look their co-relationship with the GDP of the nation, I think they are not in the same category as the league as SIBs or elsewhere in the world.
Yep.
So I think we will examine it carefully. We will also give our viewpoint on that.
Yeah, of course, those are anticipated from you market men. Very quickly, sir, you said that restructured loans is something we have to live with. Would it be higher than what you have been seeing? I mean, your first quarter was about close to 2,000 crores. Second quarter, it came down to 1,484 crores. I mean, around 1,500 crores. What can be the run rate in the third and the fourth quarters, you think?
No, I had clearly indicated for the third quarter. In fact, second quarter also we had indicated at the end of first quarter that it will be around 2,000 crore. But in the restructuring there can always be processes where something is still in the pipeline. As a result, it came down to 1,500 crore. Again, I had indicated for the Q3 we look at a pipeline of something like 1,500 to 2,000 crore. So run rate is more or less consistent. That is how the situation is as of this point of time.
All right, sir. Thank you very much, Mr. Mundra, for joining us with your thoughts. Okay, so while the total bad loans itself as a percentage will come down to below 3%, he said, they were standing at 3.15 in the second quarter, not that sanguine about restructured assets.